Well, that was quite a week on the TTF front month. Energy traders didn't have it easy, especially not towards the second half of last week, and all eyes are on a few key levels this week because a break past one might lead to bullish continuation or like a really strong bearish reversal. So let's have a look at the markets one by one and the charts. So as always, we start looking at the TTF front month first. We are looking at the weekly chart. So here we see, zooming out, that we are undoubtedly in a downtrend. We haven't made a new low since, summer 2023. But please be reminded, we are looking at like really long-term stuff here. So we have this Fibonacci retracement, which is usually here to just help us assessing how high the price can go. And a firm move above the 23.6% Fib at 30.29 would really kick off a more substantial up leg, which can usually go to like the 50% or 61.8. So we could go into the 40 range once more. So that's why the market is hesitating here so much. The tools are not giving us all that many clear signals right now. So we see that this here could be a higher trough on the stochastic, but we are not entirely sure yet. And that usually would mean more gains to follow. Also here we see that the MACD is pulling higher, but simply because the market hasn't really been moving much. So we are moving around the zero line. How do we make sense of that on a day-to-day basis? So last week was a little bit scary. So we did have a very boring first half of last week. Before on Thursday, we had this strong move higher, and then Friday, a little bit of moderation. So I'm working with this triangle right now within the underlying channel. So that essentially shows us that the market is still in an ascending channel. So overall, we are still making higher highs and higher lows, and we are looking for buying opportunities in the troughs. But we can also see that the triangle for around like 1 month now is limiting moves well towards both directions. And triangles themselves, they have no firm breakout direction, so they could reverse a trend or they could continue a trend. That's why my opinion is at the moment reasonably split. But I want to say that the stochastic looks like we have bottomed out for now, and there would be a chance for the market to move higher. But let's have a look. We can see that the momentum has been topping out, so we are gradually moving lower, and we shouldn't really take any signals from the 8 and 12 exponential moving averages, because in a triangle or any sideways range, we do not want to look at trend or momentum tools. So they're useless right now. So we actually have to wait for a break. And how would we know when we are breaking? Well, we would get the earliest signals on the intraday chart. So here I'm looking at the 15 minutes, and I find this really fascinating. So we have like 2 candle patterns happening right now all at once. We have a rising broadening wedge, which is difficult to trade. It's notoriously difficult because the market is swinging in an increasingly wider range because both sides are confident that their direction is correct until one side isn't anymore. So we would only, and rising broadening wedges usually continue to the downside eventually, but doesn't have to be now. Then within that, we have a rising wedge. Not broadening, just your standard wedge. And right now it's tentative because we only have 4 hits, right? 1, 2, 3, 4. Yeah, there you go. And we are in this tight range. So maybe looking at the stochastic, we do see maybe a little bit of an up move, but overall, I still think that the pattern will eventually resolve lower because that's what the pattern usually does. And also we started seeing here our first lower trough, yeah. We are still not making the highs are not that telling yet, but we did make our first lower trough, and this pattern usually resolves to the downside. Now here's the interesting part. Once we resolve, wherever it might be, somewhere along here, we will see that the rising wedge target, which is measured from here to here, then applied to this breakout direction, will lead us somewhere here. So which is then the rising broadening wedge support. And the rising broadening wedge support on the intraday chart is an important support level on the daily chart. So this is really important. So right now we are up here, but just a tiny break below the rising wedge, maybe let's say 30.5, we kind of know that the next target then is the broadening wedge target on the intraday chart, which means a channel support test on the daily chart. There's not really strong of an alternative case to be made right now, because the only alternative is to continue higher within the rising broadening wedge, but this would still eventually resolve lower. The only other alternative I could think of is maybe a little bit of a sideways move, absolutely. But if we are talking about conviction, yeah, the upside doesn't seem all that likely. If anything, sideways, or most likely a little bit of downside. So yeah, we might see a test of the channel support fairly soon this week. And then if we break below it, that would be important, because then the bull market would be over. So that is all for the TTF front month.